Hey everyone, GM reported quarterly earnings results that impressed stock market investors. The stock was up over 4% following its earnings release. So I'll review its latest quarterly update, and I will also update my recommendation of General Motors stock. I'll let you know if I'm upgrading or downgrading this stock, rating it as a buy, hold, or sell. So let's take a look at the numbers first.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
Right, so GM reporting 43 billion in revenue and 3 billion in earnings before adjusted taxes and 3 billion in net income, I should say, and 3.9 billion in adjusted EBIT. Now, these results led General Motors to upgrade their annual forecast. Previously, they were forecasting net income of 9.8 to 11.2 billion. They raised those forecasts, both the bottom and the top end, by 300 million to 10.1 billion to 11.5 billion. So given the strong start to the year, they now expect better results for the rest of 2024. Automotive operating cash flow also upgraded to 18.3 billion to 21.3 billion, a 300 million increase. Automotive adjusted free cash flow up by 500 million to 8.5 billion to 10.5 billion. Really large numbers here in terms of cash flow and free cash flow for GM. Legacy automakers have been doing well as supply chain constraints have eased and they've increased supply of vehicles. Customers are buying them. It's the opposite of what's happening in electric vehicles. Electric vehicle only cars, electric vehicle only companies are struggling. I just reviewed Tesla's latest quarterly results. Automotive revenues were down by more than double digits. It's a stark contrast from GM, what some would call a dinosaur company, so old, and compared with Tesla, which is supposed to be a growth stock, reporting declining revenue, with GM reporting increasing. So a interesting story to be sure here to start 2024. So GM's financial guidance includes anticipated capital spending of 10.5 to 11.5 or $11 billion at the midpoint, inclusive of investments in companies' battery cell manufacturing joint ventures. So they're going to generate $9.5 billion in free cash flow, even though they're going to spend $11 billion on capital investments, increasing manufacturing, adjusting to the new reality where governments are forcing General Motors and other car companies to produce more electric vehicles. This is not what customers want. This is what the government is forcing companies like GM to do. Now, it's going to be interesting as we move forward with these government mandates, and they've already shown a willingness to pause or reduce these mandates, these rules, as the government themselves are observing that customers aren't buying these vehicles. So they can't just force companies like GM to produce these vehicles if customers are not buying them. They're going to put GM out of business. That's going to be tens of thousands of jobs that are going to be lost. That's going to be a company that's going to go out of business because you're forcing the company to make products that customers don't want. Now, if they're making these products that customers don't want, but at the same time they're reducing production of internal combustion engine vehicles, then customers might be forced to purchase these electric vehicles even though they don't really want them. If they don't have the choice between internal combustion and the only choice is electric vehicle, they might then choose that because you need transportation, and if that's the only game in town, that's what you're going to choose. But it looks like hybrids are going to be around, and hybrids are being incredibly popular, have been incredibly popular and sought after. That seems to be a better choice for consumers given the current pricing and the inconvenience for electric vehicles. So I mentioned revenue up 7.6% year over year. 7.6% increase year over year in a quarter where Tesla reported revenue that was down year over year. Now, Tesla's quarterly results and GM's quarterly results, they're not, oranges versus oranges. So it might be a little bit different, but it's just a stark contrast between these newer EV companies that are struggling and these legacy automakers that are experiencing growth on the back of consumer demand for internal combustion engine vehicles. So total vehicle sales for GM in the quarter, they reported 895,000 units, up from 864,000 units in the same quarter the prior year. Now, in North America, growth was even better, 792,000 versus 723,000. GM International struggled with 104,000 versus 141,000. So growth coming from legacy automaker segment, not so much from electric vehicles. Electric vehicle growth has been a lot less than expected. That's not the area where it's getting investors excited for GM. It's the legacy segment. Overall, though, to update my recommendation, GM is now trading at a forward price to earnings of just 4.9. That's such a cheap valuation in comparison to the broader stock market index, which has an average forward price to earnings of between 17 and 20. Some growth stocks have forward PEs over 100. GM was trading at a forward PE of less than 4, closer to 3, just signaling how cheap it is because, in my opinion, the auto industry is not an attractive industry for investment. So much capital investment required. I highlighted earlier that GM's going to spend roughly $10 billion on capital expenditure this year, and they're going to need to continue that. It's not a one-time thing. You got to keep spending that money. You got to keep launching new models, because if you don't, customers are going to choose someone else's new model. There are so many car companies around the world, and each car company produces so many different models. Customers have so much choice, and that leads to fierce competition between automakers because there's a constant oversupply of vehicles in the market. And that didn't help the situation that since 2019, 2020, so many EV companies came onto the scene and added manufacturing capacity. So the industry was already plagued with oversupply. And then you had the EV companies coming in and adding millions of more supply to an industry that was already oversupplied. And so you can understand the price wars that are happening among EV companies, tripping over themselves to cut prices. And not just EV companies, companies like Ford slashing prices on their EV products, and legacy automakers that have EV models are slashing their prices too. That's the segment that's facing the fiercest competition, and customers are gravitating towards these internal combustion engine vehicles. Overall, the auto industry, I've been talking about, not an industry that's attractive to me. GM trading at a relatively cheap valuation compared to the rest of the market, but I think that's deserved because the auto industry, GM included, is not an attractive industry for investment, for me at least. It's too capital intensive, too cyclical, too much competition. The oversupply versus demand is worsened now due to the changing EV conditions. I just don't want to be a part of it. So I would say the stock is a hold or market perform. And I'm updating that recommendation after the earnings results on April 23rd. Did you know that over 90% of the people that watch my channel are not subscribed? It'll really help support my channel if you hit that subscribe button. And oh, by the way, one of the benefits of being subscribed is that I take requests from subscribers more often than I do from non-subscribers. So if you prefer that benefit, please subscribe to the channel.